The market right now is being pulled in two completely opposite directions. It's fascinating. On one side, you have this technological revolution in AI that feels absolutely limitless, like it's going to reshape our entire world. But on the other, there's this ticking time bomb buried deep inside the old-school financial system. So in this explainer, we're going to break down these two massive colliding forces and figure out why it all seems to be coming to a head right now.
Okay, so first things first, let's talk about the AI boom. The most important thing to get your head around is that this isn't just happening in the digital world, on our screens. Nope, this is a massive physical industrial scale build-out.
$3 trillion. Just let that sink in for a second. That's the mind-blowing amount of money that's estimated to be spent globally on just building data centers through 2028. It's a staggering amount of capital, all being poured into building the physical backbone for this new AI world.
So this is where we really have to shift our thinking. We tend to imagine AI as this, ethereal cloud of data and code. But the reality? It's so much more grounded. It's fundamentally a business of atoms. It means the winners aren't just going to be the ones with the smartest algorithms, but the ones who can master the physical world of concrete, steel, and power.
And this just lays out the real-world bottlenecks perfectly. Building the future of AI needs gigawatts of power. So much power that Microsoft is literally bringing a nuclear power plant back from the dead to feed its data centers. It needs incredible amounts of water for cooling, and it means dealing with the slow, messy world of construction permits. This is not just a tech race, it's an industrial one, plain and simple.
So when you see this level of spending, with valuations soaring into the trillions, you got to ask the question, right? Have we seen this movie before? Are we just living through a replay of the dot-com bubble?
Look, when the CEO of OpenAI, one of the most important AI companies on the entire planet, just comes out and says this, you have to pay attention. The people at the very heart of this revolution are admitting how much froth and crazy speculation is happening in the market right now.
And yeah, the warning signs are absolutely flashing. Key valuation metrics like the CAPE ratio are getting scary close to those dot-com highs. You've got famous investors like Michael Burry, the guy from The Big Short, betting against the hype. And maybe most telling, the market is incredibly concentrated. Just a tiny handful of companies are driving almost all of the spending.
But, and this is a huge but, there's one crucial difference this time around. The dot-com bubble was built on thousands of shaky startups with no profits, often no revenue, just a dream. Today's AI boom, it's being led by some of the most profitable, cash-gushing companies in the history of the world. They have the money to actually fund this massive build-out, even if things get rocky.
So here's the real twist. While everybody's eyes are glued to the AI show, this other story, a potential crisis from the old economy, is unfolding almost silently in the background. And honestly, it might be the much bigger threat.
All right, we're going to turn our attention from the shiny silicon of AI servers to the concrete and steel of something completely different, commercial real estate. So you need to understand this term, the wall of maturity. And it's not just some clever name, it perfectly describes what's happening. Imagine a giant wall of debt, all taken out back when money was basically free. And now it's about to slam into the hard reality of today's much, much higher interest rates. And the size of that wall, yeah, it's almost $2 trillion. That's how much commercial real estate debt in the US has to be paid back or refinanced between 2025 and 2026. All of it, in a totally different financial universe.
And here's the nightmare scenario step by step. Let's say you're a developer who had a loan at 3%. Now you have to refinance it at 7%. The income from your building, which easily covered the old payment, suddenly doesn't even come close to covering the new one. This creates a huge funding gap, which leads straight to defaults. And that forces the banks holding these loans to brace for massive losses. It's a hidden stress test happening in real time.
And just when you thought the problems with real estate couldn't get any hairier, there's an even murkier, less transparent corner of the financial world that's setting off all kinds of alarm bells. The massive market for private credit. Listen to this. When the CEO of America's biggest bank, J.P. Morgan Chase, starts using words like shadow market and warns that losses could be way worse than anyone expects, well, that's a signal you just can't ignore. This isn't some fringe commentator. This is a stark warning from the very heart of the system. So think of private credit as lending that happens outside the normal, highly regulated banking system. It's exploded in size because it fills a gap, but that also makes it kind of the Wild West of finance. The rules are looser, it's way less transparent, and it's much harder to know who's in trouble until something suddenly breaks. So, okay, we have these two enormous and seemingly completely unrelated stories, right? You've got the futuristic AI revolution on one side, and this classic, old-school debt problem on the other. What in the world could possibly connect them?
It all comes down to one single thing: the cost of money. The exact same high interest rates that are squeezing the life out of commercial real estate are also making it more expensive for AI companies to fund those trillions of dollars in data centers. One economic lever is creating this massive opportunity in one sector and a potential crisis in another.
This slide shows the great divergence happening in our economy perfectly. On one side, you have the meteoric, gravity-defying rise of the new AI economy. And on the other, you have the deep financial stress in the old economy as banks and lenders struggle with the fallout of this new rate environment.
And here's the kicker. These two worlds are not separate. A banking crisis triggered by commercial real estate would cause a system-wide credit crunch. It would poison the well for everyone. Suddenly, all that money that AI companies need to build the future could just dry up. The plumbing of the entire financial system gets clogged, and at that point, it doesn't matter how great your technology is if you can't get the funding.
Which leaves us with the ultimate question, doesn't it? The AI revolution is absolutely real, but so are the deep, undeniable cracks forming in our financial foundation. And the great unknown for the next few years is whether this incredible new wave of technology can keep soaring, or if it's going to get pulled back down to earth by the problems of the old world.